All right, Cheryl, thank you. Billionaire investor Jeff Green back on Fox Business last night, giving his take on the latest market moves.
When you get a market like this, the analogy I use is like when there's a sale before Christmas. If you were looking at thinking of buying a certain suit or sport coat or pair of jeans and you wanted to buy it, but then suddenly it's 30% off, you go and snap it up. But if you see an ugly purple sport coat that happens to be 50% off, you shouldn't buy it ever. And the same with stocks.
He has such a way of saying things that made so much sense. Well, that was billionaire investor and real estate entrepreneur Jeff Green saying the market sell-off is a good excuse to buy in and bargain shop. Joining us now is Jefferies chief economist Ward McCarthy. What did you think of those comments? I mean, that's plain and simple. That makes sense to me.
Well, yeah, if there are stocks out there that you like, you get a chance to get back in the market at much better prices.
He, by the way, also told Fox Business in the middle of the market sell-off on Monday that he was buying 100,000 shares of Facebook, one of the most beaten down stocks that day.
Well, a lot of times market distress creates opportunities, and I think that's what the
So what's the opportunity today, Ward?
Well, the stocks are going to go higher again today, and I do think that the U.S. stock market, even though it's had a bumpy ride recently, will continue to do better over time. When you look globally, the U.S. economy is in better shape than anywhere else, and I think that's really what's most important.
So you spend your day digging through these numbers. We got GDP coming out at 8:30. You expect what there, by the way?
3.3,
which is in line with most economists' estimates that it's going to be revised nearly more than a full percent higher. Will that rally markets more than what we're seeing right now?
Well, I think it will probably support the market more than what we're seeing right now, yes.
Okay. So I was asking you during the commercial break, and you had an interesting response. What's the conversation that's missing from financial television, from the cover of the newspapers right now? What are people not getting or not talking about that you're looking at every day when we look at this, the gyrations in the market?
Well, I think that the gyrations in the stock market globally really are China-centric. And there are some people out there who are trying to relate it to what the Fed is thinking of doing right now, which is start raising rates.
So you think that the wild swings we saw this week, Tony, and feel free to jump in here, are primarily China-driven?
Yes, I do. And it all goes back to the devaluation that they had a couple of weeks ago.
Do you agree with that?
Well, I think it's the fear of what's happening in China. They're actually,
exactly.
We're going to go to 3.3% upward revision in GDP today on the back of higher consumption in a service-based economy. So the whole idea that this is a good house in a bad neighborhood was great about 3 years ago. This is a good house that continues to get better regardless of what's going on. China, as you know, China is not new news that it's slowing down. They had a hard landing in real estate back in 2011 going forward. So to say that China's slowing down and it's going to cause this collapse of economic activity, it's just factually not correct so far.
And you're bullish, too. You're bullish broadly on U.S. equities, aren't you?
Well, I think you have to be. The market correlates to the direction of earnings. What we do for a living is very funny. We come on TV and we comment on every data point that's going to get highly revised. It's kind of silly.
Well, then we're not making your job tough enough, then.
Well, no, you're not, but the clients are. But what ultimately the market correlates to the direction of earnings. The direction of earnings is driven by economic activity. That's driven by the slope of the yield curve and lending. That's driven by Fed policy, and that's driven by core inflation.
You make a good point, is that the clients are making it tough on you. I mean, this is a tough time because clients. Tony, cover yourself.
I sit in a trading room, so it's my traders who make it more interesting.
So tell me about that. What are they saying? What are they feeling, hearing? What is this environment like when you are sitting in a room full of traders?
Well, it's just very difficult. It's temporarily the markets will shift from focusing on economic fundamentals, and they'll sort of be overwhelmed with emotion. And we have seen
what? That's
that
the
over
number
the
one
past
mistake. Who are you guys? Who's working for you? No, I'm just joking.
Well,
I'm not trying to insult your whole
point. They do.
Oh, get the emotion
but that's what drives the price
action. And this is such an important point that the clients know as well. Anytime you have a correction, by definition, it has to come with a perception of a fundamental change. Otherwise, nobody would sell it. So the only thing that over time changes the fundamental direction in a levered economy is the use of credit. You need to shut down a credit broadly. So talk to any of the people looking at it and ask them if they can get credit. I can still get credit. There was a guy that moved from Chicago to Connecticut.
And there's the willingness to take on that debt.
Well, household debt service ratios are at their lowest level, near their lowest levels in history, and delinquency rates are at a record low. hard to make a negative credit bet when that is true.
All right, so Ward, somebody's waking up this morning. The stock market, Dow's up 200 points ahead of the open. Big rally yesterday after multiple days of heavy selling. How should someone prepare for their day today?
Well, probably they start by looking to see what did the China stock market do, and they saw that was up.
A rally.
Then they see, oh, gee, Europe's having a pretty good day, too. And the expectation, and I think the reality will be that will also swing over to the U.S. today. Right. So we'll have another pretty good day in the U.S. stock market today.
Will we close higher?
Oh, yes.
All right, there you have it. A guy willing to take a stand. All right, Ward McCarthy, thanks for joining us bright and early.
Thank you.
All right, coming